afternoon. You're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Monday. An international think tank trims its growth forecast for the Philippines this year as crude prices continue to soar.
The government will begin releasing fuel subsidies to PUV drivers. That's tomorrow in time for a new round of oil price hikes.
Local shares are seen to continue dropping this week on the back of ongoing geopolitical risks and looming rate hike by the U.S. Fed.
And local hotels expect the budget department to release about 1.7 billion pesos this week to settle unpaid bills for the quarantine of returning OFWs. We begin our broadcast with an international think tank trimming its growth forecast for the Philippines this year on the back of the surge in global crude prices brought by Russia's invasion of Ukraine.
Capital Economics expects gross domestic product to grow by 7.2% this 2022. That is lower than its earlier projection of 8%. This is also on the lower end of the government's target of 7 to 9% growth for this year. Now, despite the slash, the Philippines is seen as one of the strongest economies in emerging Asia for 2022. In fact, the country is expected to be third top performer in terms of GDP growth this year, next to Vietnam and Bangladesh. Capital Economics also increased its inflation forecast for the Philippines this year to 4.3% from 4% as oil prices continue to soar. For ING Bank senior economist Nikki Mapa, a higher inflation caused by a prolonged Russia-Ukraine war may dent our country's recovery prospects. Mapa says the economy may only grow up to 5% this year.
Now, starting tomorrow, the government will begin distributing fuel subsidies to PUV drivers affected by the skyrocketing oil prices.
But some are doubting that they will receive payouts, saying the aid might only go straight to their operators. Mon Gualvez with the details.
The government is set to distribute 2.5 billion pesos worth of fuel subsidy under the Pantawid Pasada program. Each beneficiary will receive at least 6,500 pesos. This is also just the first tranche of payouts, with the second round scheduled next month. The program, meanwhile, has been expanded to cover not just public utility jeepneys, but also taxis, buses, UV Express, TNVS, tricycles, and even delivery riders.
Malaking bagay din yan eh. Kung sakaling pwedeng iparehas na lang din sa lahat-lahat, gawing 6.5 na lang din, mas pasalamat po kami.
But some of them doubt they will get any subsidy.
Tingin mo hindi kayo makakatanggap?
Tingin namin hindi eh. Siyempre napunta sa operator yan eh.
Hindi nila nakukuha yun, subsidy ng mga driver. Hindi namin masabi kung na kanila, nakukuha lang na kung sino-sino.
Magkano lang yun? Yung petrolyo talaga ibaba. Wala pag-asa yan.
This is the same sentiment from the Liga ng Transportasyon at Operators. The group called on the government to offer real solutions to the problem.
Kailangan ng driver po ay maliwanag, tapyasan yung anong buwis na excise tax o naman, di ba? At saka i-repeal o revisahin yung batas deregulation law.
At least 30 transport groups have threatened to hold a strike if the government does not hear these demands. The government has also allotted 500 million pesos in petroleum discounts for the agriculture sector. Each beneficiary under the program will receive 3,000 pesos. For News 5, Mon Gualvez, we are One News.
Brace for a new round of big-time oil price hikes tomorrow. In its forecast released over the weekend, Uni Oil says it is expecting gasoline prices to go up by up to 7 pesos per liter this week. Meanwhile, the price of diesel seen to increase by up to 12 pesos and 30 centavos per liter. If this takes effect, this will mark the 11th consecutive week of oil price hikes. The Energy Department has yet to confirm the price adjustments.
In other news, the Philippine Hotel Owners Association is expecting the Budget Department to release over 1.7 billion pesos this week. That's in order to settle the government's balance with hotels used as quarantine facilities for returning OFWs. During its meeting with OWA, the Philippine Hotel Association had showed a billing for 600 million pesos. However, the agency said they still need to reconcile the data. At present, OWA figures show that over 2,000 OFWs are still undergoing quarantine in 70 hotels. Now, to get more updates on that, we have on the show Benito Benzoin, Executive Director of the Philippine Hotel Owners Association. Good morning, Sir Benito. Thank you for joining us today.
Good morning, Jester.
All right,
Danny.
sir. First, how did it reach this point, unpaid claims ballooning to 1.7 billion pesos? And are we talking about claims as far back as 2020 and even 2021? How many hotels are we talking about here?
The total accounts receivable of 1.7 billion as of last Friday, no, 1.7 billion pesos was an accumulation of the collectibles from the very start. As you all know, the hotels have been providing our returning OFWs with the quarantine rooms, no, from 2 years back. So the amount, like I said, is already the accumulation over the last couple of years.
Now, sir, how many hotels are affected here? And at the same time, like what we reported earlier, you have the government vowing to pay this week. Are you expecting them to pay in full, or like past experience, is it going to be in trickles?
We have, well, at least among the members of the Philippine Hotel Owners Association, there are 84 hotels that operated or were operating for quarantine. We have another 10 member hotels in other parts of the country, Cebu, Davao, Clark. We're hoping that OWA will be able to settle the entire amount by this week. We were assured that the funds will be released by the DBM to OWA, no, to allow the administration to settle all accounts receivables.
Sir, you mentioned this 80 plus 10, diba? Hotels still being used for quarantine. What percentage of that is that on the total amount of hotels available? And to what extent and what's the timing for that to shift towards more leisure and business days?
Well, I can only speak for the members of the hotel members of the Philippine Hotel Owners Association. For NCR, no, we have about, like I said, 84 that are operating for quarantine hotels. But there are other hotels that are not members of FOA. No? If I'm not mistaken, based on the records of the Department of Tourism, there are about 500 or 600 hotels, no, in NCR. Now, many of them have been shifting to regular operations because clearly the demand for quarantine rooms has gone down. Based on the feedback that we received from OWA, less than 10% of returning OFWs will require quarantine, meaning they are not yet vaccinated or not yet fully vaccinated. So you can just imagine the impact on the revenue stream, especially for those that were operating entirely for quarantine. This has necessitated a re-strategizing on the part of the hotels. So many of them obviously will have to start looking at the leisure market.
Now, more to that point, Sir Benzoin, the last time we talked, the industry tries to make that shift from being quarantine facilities to actually going back to your traditional business. You did say that you are asking government for aid, for help, since you don't expect tourism to go full-blown right away. What's the update on that? Did you get any commitment here from government?
Well, we're not really looking at financial assistance for now. What's really important is for the hotels to make the necessary adjustments so that the market mix will allow them to have a comfortable level of revenue stream. Now, the lifting of quarantine requirements for fully vaccinated foreign travelers from visa-free countries is obviously a welcome development. Of course, the summer season will also provide huge opportunities for domestic tourism. And even this early, we're seeing very encouraging signs of strong demand for travel around the country, which of course will be good for the hotels. We're monitoring the forward bookings. Not surprisingly, Holy Week will be, as one of the peak periods for travel, will be providing the hotels with very good occupancy rates.
Okay, sir. So more to that point, full reopening to tourists, hopefully by April 1. But of course, you do still have some countries wherein, especially in Southeast Asia, no, where it's still difficult for them to return to their own countries, even if it's open here. I'm talking about China, which also has one of our biggest tourism revenues, if not the biggest. How is that affecting, sir, your outlook in terms of growth? And also, with all of the things going on in the world, is there also an impact? I don't know, with the oil prices, the fuel hikes, does that actually impact your industry?
Well, first of all, on the quarantine requirements, no, on the way back to their home country, this is something that we are obviously reviewing very carefully. We realize that there are some countries that still impose very stringent quarantine protocols for their nationals when they return. But hopefully, over time, they will begin to relax also the quarantine requirements so that we can get more of the leisure and even the business traffic. The developments in Ukraine will obviously have an impact on the movement of travelers uh, from Europe. Of course, just like everyone else, we're hoping that the situation can be controlled. But in the meantime, we're seeing very strong demand from balikbayans, particularly from North America. So this is something that will help fill up the rooms in the months to come.
Sir, last question on that point. Do you have a revised outlook when you will be returning to pre-pandemic levels? Is this something that the industry can already confidently give an update on?
That has been the most difficult question to answer. No? It's really very difficult to predict when we will go back to pre-pandemic levels. This will depend on many factors. Of course, apart from the obvious, which is to contain the pandemic, we also have to have the airlines going back to their operating capacities closer to pre-pandemic levels. So when we talk about flights, we're talking of international flights inbound to the Philippines and domestic. The other thing that has to be considered would be, of course, the bringing back consumer confidence. No? Bringing back consumer confidence and making sure that the restrictions on the way back to their home countries are also relaxed. But overall, the hotels are prepared. We've been preparing for this for the last couple of years, and we're quite optimistic that we're seeing signs of recovery, but it will take some time.
All right, so slow progress, but still is progress indeed. Thank you so much, Benito Benzoin, Executive Director of the Philippine Hotel Owners Association.
Thank you very much.
Vice President Leni Robredo has emerged as the top presidential pick of Philippine investors. A Bloomberg survey of 28 investors and analysts gave Robredo the highest score of 106. This means that survey respondents believe that Robredo is the best bet to oversee the country's economic rebound. Respondents were asked to rank the candidates on a scale of 1 to 5, with 5 being the highest. Senator Ping Lacson came in second with a score of 91, followed by Manila Mayor Isko Moreno with 81. Former Senator Bongbong Marcos along with Senator Manny Pacquiao were at the bottom with a score of 46 and 44 respectively. Coming right up after this break, investors are bracing for another volatile week at the local bourse. More of that and other stories when Businessworld Live returns. Stay with us. And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
And let's not forget, it's another week of the war and its devastating effects. Dan, markets notwithstanding, what's the short-term outlook on that?
As you mentioned, Jess, we cannot forget that the war is having devastating effects. It is also affecting all other countries away from that. And you can take a look at how the index or indices over in the United States closed on Friday on the back of that. Nasdaq down by 2 2/10%, the Dow Jones as well. And Asia Pacific is set to follow suit, like you mentioned. Apart from the fact that there were failed peace talks between Russia and the Ukraine last week, you also have the U.S. reporting a 40-year inflation high of 7.9% last February. And, you know, these are rocking the markets together with us over in Asia. One major issue, of course, is the continuing prices of crude oil, which continues to be above 100 a barrel. The good news is, if you can call it that, it slid a touch from, you know, the highs of 130 plus. It's now paring back to 109. $35 per barrel. And this according to Luis Lumningan of Regina Capital. The oil prices settled lower. That's as Russia pledged to fulfill the contractual obligations. Some traders actually said the supply disruption concerns were overdone. And let's take a look at our own index. Oh, wow, sliding below 7,000. It's quite a shock. This morning, it was already at 7,000 levels at the open, but now we're seeing it with a dramatic drop to 6,900. That is down by a hefty 2% already. All eyes will be on the Fed's policy review. That's March 15 to 16. The Fed is expected to raise rates up to 7 rate hikes. That's according to Reuters with a survey of their own. But finally, let's take a look at quick check on which ones are the ones really dragging our index down. And you can see a very mixed bag here, led by declines, led by BPI, that's down by a hefty 3%. Ayala Land as well, sister company. Ayala Corp, very big losses here for some of our blue chips. Nevertheless, we do have IPOs to be watching out for. You've got another one that has just been approved by the SEC. That is stockbroker CTS Global for an IPO as much as 1.375 billion pesos. That will be listing on April 13 provisionally. And I'm taking out a Call Financial here, which is, of course, another listed stockbroker. And finally, another one to be watching out for is the financial space. That's as Bank of Commerce has priced their IPO at 12 pesos per share, a bit of a discount for what they were hoping for at 12 pesos and 50 centavos. Quick peek on our peso weakening further deeper into 52 territory, trading at 52.408 to the greenback.
Here are the other headlines we're keeping our eyes on. The national government's debt payments rose by a fourth to 1.2 trillion pesos last year. The Treasury says the government's debt service bill jumped by 25% from the over 900 billion pesos recorded in 2020. Last year's total was just under the 1.28 trillion peso debt service budget for 2021. Debt payments climbed on the back of an increase in amortization payments, which accounted for 64% of the total debt service bill last year. The rest were used to settle interests.
Land Bank has approved over 100 billion pesos in loans to LGUs. That's to finance their pandemic response initiatives. That is about 2/3 of the bank's loanable funds allocated for pandemic-related LGU projects. Eligible projects under the Rise Up LGUs program include the purchase of produce from farmers in their jurisdictions. The programs enhancing basic support services like healthcare and infrastructure are also eligible under the loan program.
The DBM has already released more than 60% of the 5 trillion peso national budget this year. The Budget Department reports that some 3 trillion pesos has already been released to government agencies and LGUs by the end of last month. This leaves some 1.97 trillion pesos to be released during the remainder of 2022. Releases to government agencies amounted to 2.4 trillion pesos, representing 83% of the total allotted to them. Special purpose funds released were meanwhile at 100 billion pesos or 24% of the allotted amount. And that's a first look into the business day this Monday, March 14, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.